What do you do in EM? I mean, in blue chip America, you go to cash. What do you do in EM in a time like this?
Well, you try and invest in stocks that have some degree of protection in this type of market. And that's the beauty of having investments to go into. I mean, there are companies that have natural hedges. There are companies that have high capital barriers that can protect you to some degree against this type of pressure. Is it country
specific, or do you really have to just absolutely go corporate granular to find companies that can avoid Turkey, avoid Argentina, and the like?
Well, I think we believe that you want to be in companies, even in those countries, that protect against some of that weakness. You know, an exporter in Turkey may actually be doing reasonably well during a period like this.
Mm-hmm.
James, overall, what is the one thing that we misunderstand about a lot of these emerging markets?
Well, I think this period is definitely being dominated by dollar weakness up until very recently. And so it has been, a period where in a lot of these countries, you've had current account deficits. You've had actually very impressive economic growth. Inflation has been relatively high. Interest rates have not been held up enough. And I think you're seeing something of a confidence shakeout in many of these markets. Now, this didn't really start with Turkey or Argentina. I would say 2-3 months ago, it began much more with the Philippines and then Indonesia. So I think this is a situation where it's changing over time, and in another 2-3 months, it may well be somewhere else.
Okay, but James, if you look at a lot of the equities, right, in emerging markets, how much do they have to do because of dollar moves, currencies, or the old kind of structural reforms? And how much do they have to do about chips, artificial intelligence, and equity stocks just going up because a lot of the emerging markets produce the components used for the future of technology?
Well, technology is now the biggest sector in emerging markets. We haven't seen that since roughly 17, 18 years ago. So that is a very big part of emerging markets today. It's much more like the U.S. than it is like non-U.S. developed markets. But emerging markets still have an important currency side to them. And we've seen some very rapid movements in the course of the last month in currencies.